Hi, this is JP Newman from Investing on Purpose. I am so excited to share with you a big episode today with my dear friend, partner, Tom Bacon, CEO of Civicap Partners. I cannot wait to share Tom's story with you. Tom essentially created a company by taking a problem back 20 years ago and turned it into a company that produced $10 billion of assets under management. He sold the company. You'd think most people would just rest on their laurels after that kind of sale, but not Tom Bacon. He saw another problem out there. We actually kind of were balancing with it together. And the problem was affordability in housing in America for our workforce, for our policemen, our firemen, and our teachers. Everything's going up. As you know, rents are going up, gas is going up. How do we address this? And more importantly, our industry says you can't build nice properties in nice neighborhoods. In other words, you can't go to school where you want to go to school. And as you might know, there are a lot of Harvard research says that your outcome in your life, at least 50% of it is dependent upon your environment. So where you live and your community is critical. Tom turned the whole idea that you can't do this upside down on his head, and together has basically raised over $300 million in the last 18 months. And right now we're currently under construction or in development on over 4,000 units. It's just incredible. And it really is taking a very different approach, which you're gonna learn about on the show. I mean, most importantly, I think you're gonna really figure out that Tom is a true thought leader. There's very few people that just aren't followers, but are thought leaders on how you address a problem and create a 10x better solution with a much higher and a much more profitable solution. So I look forward to sharing with you some of Tom's secrets, Tom's stories. Let him tell you about the 5 steps that he takes as an entrepreneur, and no matter which company it is, to kind of come out with what I believe is a much better outcome. I think you're gonna enjoy the show. I think you're gonna leave the show with a lot of new thoughts about different ways you can bring more sustainability and more profits into your business. Enjoy the episode. Well, welcome to our first video and audio episode of Investing on Purpose. It is so exciting that we're finally out the door. We've had some great conversations with Ryan, but today I wanted to bring in a new guest, a dear friend, and someone who came to the top of my mind when I thought about this topic of how do we create better outcomes for purpose and for profit. And with that, I bring in my friend, my business partner, Tom Bacon. Tom, I'm so glad to have you here, and thank you for joining me.
It's fun to be here today. Fun to kick this off with you.
Kind of a fun day because we're also celebrating with an investor relations party, and tonight we have a bashing party to start things off with. And I was lucky enough to get you in Austin so that we could do this together, which is just fantastic.
Well, it's super, and your investor event was great.
Thank you.
I thought that was really fun.
It was so terrific. So much energy. So Tom, I want to start talking about why I brought you here. You're probably saying, why did this episode? And obviously, first of all, it's kind of funny that we did meet in Africa with 40 people in the middle of Kenya with the Samburu tribe, 40 of us. And it took us 3 days to actually ever ask each other, because we liked each other so much. To actually ask the question, what do you do? And I remember I was on a Jeep with you, right? It might have been a Range Rover. And we were looking at some animals. And I think that's when I asked the question. And you're like, I do real estate in Texas. I go, well, that's a funny thing because I do real estate in Texas too. And it was so cool because that really started, I mean, obviously the friendship and so much of our, how we're aligned was so natural. But then this idea of us starting a conversation together of identifying how can we create greater good through real estate. And I don't think many people have those conversations of greater good through real estate, which isn't.
No, that's not a traditional, that is not a phrase that I've heard very often in real estate. Right.
Yeah. And it was interesting, Tom, because when I met you, you really weren't doing what I was doing, which is these workforce housing apartments, for our workforce, our policemen, our firemen, our teachers, rents between $800 and $1,500. I know you look at it as kind of what is, you said, $25,000 to $85,000 kind of.
Yeah, we try to hit 35,000 to about 75,000 of income level. Everything we do, we want it to work for that demographic.
And one of the things I think is interesting, because like I said, I know when we met, you were still doing you co-founded an extremely large office REIT. You were kind of in that world, which you also kind of creatively flipped on its head with how you actually did the investment thesis in the process with your quantitative analysis, which we'll say for another episode, which was super cool. And then you and I started talking. I think we were actually in Detroit at an urban league conference or one of the conferences.
We were at ULI.
We were at ULI, and you looked at me. We were having dinner, and you looked at me, and you said, this workforce housing is a problem. Because you had sold your company. You kind of could have just, at that point, if you wanted to, you could have just retired. It was a pretty big sale, I think we can acknowledge without going into it. Like, certainly didn't have to work, but there was a glimmer in your eye, and I saw it that night when we were at dinner. You said, JP, this is a real problem in America. This might be one of the worst problems that we are facing. You have 50% of these middle-class people that are being rent burdened, where it's more than 50% of the rent, and that just keeps getting worse and worse with inflation and everything that we're seeing. We know we have a supply-demand imbalance of about 3.5 million units of more demand than we have supply, and it just keeps getting worse and worse and worse. And as you've seen, Tom, this industry doesn't necessarily react to, like, how do we proactively solve both a social, socioeconomic, and a real estate problem? And I'd love to hear, like, why? Like, what got you there?
How did we get here?
Yeah, how did we get there?
JP, it's interesting. You come at it from a whole lot of different ways, but I started the world as an architect, and architects all think they can save the world. And then I went to business school, and business school was money, 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 money. And you had to, like, kind of marry those concepts in your life. But the company that I started after Lionstone, starting Civicap, the genesis of that company was really, I was head of Latin America in the mid-90s for a company called Hines. And I saw that what they were doing with middle market housing in Brazil and Mexico was way better than what we were doing in the United States. And I tried to actually take us into that business, but that was kind of a step too far for Hines. And when I left in '99, I wanted to start this business because 20 years ago, there was a crisis in this space, and it's only gotten worse. But no one would give me any capital for it. And when I couldn't raise capital for it because I've been a Hines person, I created Lionstone because that fit the mold. And it's like, at different ages, you're able to do different things.
Yeah.
And I was at an age where, with kids and colleges and all the rest of the things people have, I went to where the capital trusted me, and I could make things.
And this was large institutional capital. I deal with high net worth investors, and you're dealing with people who are putting 25, 50, 100 million plus.
We put $10 billion to work at Lionstone. So when we wrapped up Lionstone, I really wanted to figure out how to solve a social crisis and a giant supply-demand imbalance with private sector capital and creativity. I just thought that's a great challenge, and it's really important. It's the number one issue in American cities now, is the housing crisis. And when I met you and we were talking about it, I was in the middle of looking around the country for who's doing the best work in the country. And you guys really stood out. And it was so interesting that you stood out, because it's like, they own a bunch of apartments around, but you had 5,000 or 6,000 units. And 5,000 or 6,000 units is this big in this country.
Sure.
And I couldn't find anybody who was doing it, so I said, well, if no one's doing great work in the space, then you ought to start a company. And we started this company with the idea that the entire manufacturing capacity for rental housing in the United States is focused at the high end. It's in a race to the top. And no one's concentrating on the products that work for the firemen, teachers, policemen, HEB workers, everyone else who keeps our city working.
Right. Which, by the way, Tom, I always say this, that's 41% of America. We talk about crises in housing and homeless and these things, but this is actually this is 41 million people that can't afford a $500 emergency. It's it's kind of the working class in America. So this is a really, really big segment of the population. This isn't like a niche problem that we're having here.
No, it is a huge issue, and there are government subsidy programs and there's philanthropy, and neither one can approach the crisis properly.
Why is that, by the way? Why do you think that is?
Yeah, the government subsidy programs, they kind of start with good intentions, and then they get convoluted. And the best example I think of is in Houston, Texas. I can build a unit just like a LIHTC, which is the government supported unit, I can build for $100,000 less than the LIHTC builders can, because they're all tied in with all these requirements, and they got to make everything hold still. So I build for $140,000, what they build for $240,000.
Right.
Exact same product.
Right.
And then they subsidize it $100,000 to get it down to where I'm making I'm doing a market rate deal.
Yeah.
That's crazy. Okay. And then the philanthropists are all talking about this because it's the most obvious crisis in the country, but philanthropists can't figure out how to do this, and there's not enough money. The only way to solve it is private sector capital and creativity. Private sector capital has to get a market return.
Yes.
And the creativity is saying, okay, if the manufacturing capacity is all up here at the top, let's get down here and redefine the products. Let's figure out how to do affordable living in unaffordable locations. What does that mean? And we need to do it at scale. That we're messing around with 3,000, 4,000, 5,000 units. We need hundreds of thousands of these units.
Right. But Tom, what's so fantastic is there's so many problems out there that we're told are not solvable problems. We keep seeing on the news, affordability. We keep hearing about the affordability crisis. Government tries to raise, to your point, government tries to do it through bonds. From my experience, they tend to create ghettos. And it becomes very institutionalized. So what I love what you're saying is you're taking a really creative approach to a problem, which is really what the show is about, a problem where people say can't be solved, and it's absolutely solvable. And the way it's solved is with innovators like yourself and what we're doing at Thrive. You got to try and scale it up. So now that you actually decided that you launched the company, you're doing this, you have this great idea of a thesis. Like, how did that go? Was it as easy as you thought? Like,
here's what's fun about it is I went to a few of my friends who are CEOs of big apartment REITs, and they're building lots of stuff, and I'm telling them I want to do this, and they all basically tell me you can't do that. It was like over and over again, that can't be done. But I'm looking around and I'm seeing entrepreneurs who are doing interesting projects around Texas. I'm actually seeing them around different parts of the United States, but I was really concentrating on Texas. It's a good place to get started. And I started just investing with these developers because they were doing something really smart that was hitting the low end. Well, they were spending all their time worrying about capital, not worrying about product.
Right. Which is very typical. It's always chasing the money rather
They're chasing the money.
Yeah.
Money is always the fifth thing you need.
Yeah.
Okay. You got to have a vision. You got to have a strategy. You got to put a team together who could do something, and you got to prove you're going to organize it. If you get those things, capital is always there.
Yeah.
So what I did is went and I found young entrepreneurs, and I made a couple of commitments to them. I made a $50 million commitment. I said, quit worrying about capital. Focus on your product and scale what you're doing. And I made another $50 million commitment. Now, I didn't have that $100 million, but I knew that what they were doing was super valuable, and we could attract capital to it.
Wow, that's a great lesson. That's from experience. That's great.
And too many people put money at the top of the. You've seen this forever. People put capital as the number one impediment. Capital is never the number one impediment.
Yeah.
Vision, strategy, team, tactics.
I love it.
That's where it all
and
happens.
You've proven that time. I mean,
it's always worked.
Yeah.
It's always worked. So, and then I went and I passed the hat with some friends to get that first 100 million and you were one of those friends. We came in, I had the three people each come in with 25 million. You came in with 25 million.
Yeah.
And so I'd made these commitments, and then the capital came in. And with that first 100 million, we proved you can build affordable living in unaffordable locations. But I needed to then, as you recall, we were just like we were all talking, we're going to put these deals together. I didn't have any people or anything else. And so we had to then build the team because our real mission is scale.
Yeah.
So we took 100 million and proved a concept. Now we need many hundreds of millions because we're going to scale it.
Hi, this is JP Newman of Investing on Purpose. So glad you're enjoying the show. Just want to remind you that these episodes are all about diving into some great thoughts, but it is for entertainment purposes only. This is not investment advice. So let's have fun and enjoy the show. And this is not your first rodeo scaling a company from nothing to...
I've scaled things.
You've scaled things. So this is something that you're comfortable with doing and what have you. What surprised you in this first 100 million, the first fund, of what maybe was easier or harder than you expected in addressing this problem? Was there anything that stood out?
We started right before COVID kicked in. That was tricky. Our surprises have all been to the upside. I've never had this happen to me in my life. Okay, so what we have found is a deep, rich environment. The demand is forever. So you don't have to worry about demand. That's good. There's a tremendous amount of innovation happening in this space. And you think about it, we're putting capital in with the innovators. And I now think of this as just a manufacturing process, okay? I need to build I'm manufacturing units, I'm manufacturing returns, and everything we do from concept to completion is efficiency. So I've got good fortune that I've got long relationships out in the business. I've been able to put together a great team. Everything we do, we can do on a handshake.
Yeah.
Okay. That's important because you can move fast.
Yeah.
You trust each other.
Yeah.
Number one currency in real estate to me is trust.
And I can tell you, Tom, because you and I, over a broken bike pedal, we were mountain biking together when I broke my bike pedal. And we looked at each other and said, do you remember what happened, Tom?
I do remember.
We were in Utah, mountain biking, and we looked at each other. We both said, we have such a passion. We should be doing something together about this. We went into your house, and like a day later, we made the $25 million commitment. I'm like, we should be doing this together.
And you know, JP, I've actually sort of wondered about that for a while, because if your pedal hadn't broken, I'm not sure we would have fully gotten there.
We needed to slow down so we could actually talk. But to your point was, I think it actually was a long time in the making, but it wasn't transactional between us. It was a really natural alignment, and the trust was there. So to your point about the comfort and the trust, I agree with you. It's a great premise, but when I saw your team, your track record, your team, the implementation of a new kind of plan that just made sense. Because again, my job for Thrive is to make sure I'm creating a great return for my investors. That's still my number one job as a private equity firm. But it was so natural and so organic because you are really, really good at doing everything you just mentioned. And to actually put out in a process, I can understand now how you create that.
And what I say around Civicap is they were an overnight success, 40 years in the making.
Yeah.
Because we have relied so heavily. We've been fortunate to put together a team. We've got investors that trust us and have seen us in various iterations. And we've moved into a segment of the market that an awful lot of smart people are trying to figure out. And just like everything else you see in business now, it's not the big companies that are going to move down market. They're not going to do that. They're in a race to the top. They're going to keep that race going. It all works in their system. But it's the small innovators that have allowed us to now, with our second fund, we've got 4 products in the market. With our third fund, we'll probably have 8. And look, we're fortunate to start in Texas because Texas is on fire.
Yeah.
And for a variety of reasons that we don't need to go into here, it's on fire. But
sure.
It's going to stay on fire for 20 years.
Yeah.
And affordability sort of disappeared in Texas. Even though we're known as affordable, we became so much less affordable in the post-GFC period.
Yeah.
And
GFC is?
Great Financial Crisis.
Okay.
Yeah. So, no, and that you and I came together and look, you talk about it so clearly from a social impact standpoint. That's in my heart and in my soul, but I am a diehard capitalist.
Yeah.
And to get my community of investors together, I had to have this has to be a diehard capitalist approach. And it can have a little icing over here, the social interest, social impact. But we need to be right down the fairway.
The business plan needs to be sound. They're looking at the return more than they're looking at the social impact.
Yes, and now they're liking the social impact. It's like, okay, now we're on our second 100 million. We've actually got 300 million in commitments. We're staying 100 million ahead on committing to the marketplace of investment. We're 100 million ahead of where we actually have capital.
Yeah, that's
kind of where we're running this right now. And that, for people who think about that, that sounds like a whole lot of money. But there are reasons that we don't need to go into for why that actually works with what we're doing. Actually, I'm going to say one of the reasons why it works with what we're doing is people still can't quite believe that we can turn out high quality returns and keep developing more product types. They think, you got 4 products now? I'm thinking, we only have 4 products. Yeah. They're thinking, how'd you get so many so fast? This market is super innovative. And what's really fun is, you and I know this, you don't know it as much as I do, but you always want to make younger friends. The people who are innovating right now are all young people. They're all 35 to 45 years old.
Yeah. They say that they call it the modern elder. It's a Chip Conley saying. They said that actually the most successful person, kind of even from 40 and above, are those who can use their wisdom and experience from what they've succeeded and failed at, and actually learn the lessons from the failures and the success, and then also look to someone in their 20s, 30s, and 40s and not lose the innovation of getting so cocky or so comfortable on how they made their money, their success, that they're willing to be flexible, but yet use their wisdom from their success and failure. And I thought that was a really interesting. Chip Conley became the chief marketing officer, I think it was Uber. No, it was Airbnb. I'm sorry, it was Airbnb. Yeah. At 60 years old. And that was his big lesson. Hyper successful, and he already had a company before that. I want to ask you a question. So how will you know, Tom, your why? How will you know your legacy of what, do you have a visual of, is it a unit count? I know I really solved this problem. I know affordable housing, that I put a dent in this because I got to X amount of units. What does it look like for you at the end of the day in solving this problem?
I was very lucky to have a great mentor. And I worked for Gerald Hines for 15 years. And everybody, those of us who were in that circle, Jerry Hines kept the enthusiasm of a 35-year-old until he was 90.
Love it.
And he loved the business. It was fun and interesting every day. Well, we're solving a super complex problem. And we're doing it with people we like. We're building communities we like. What's my legacy? I'm actually just having a ball, to tell you the truth.
That's great.
I'm having fun. I care deeply about what we're doing. I'd love to make a dent in the space. But I actually just don't have a headset for a legacy on it. Okay. I sort of just, I love a business with a mission. And I really love real estate investing. And the problems in my entire career of real estate investing, I think today is as interesting a moment, is not just as, it's the most interesting moment in real estate investment that I've ever experienced. Our cities are changing faster. It's more important what we do. Who we're going to be when we grow up is really being defined right now. And it's just a great period of innovation. So I'm super happy to be in it.
It's so cool, from the sparkle of your eye at dinner to about $1 billion of assets. That's pretty fast. That's only been 3.5, 4 years. And yeah. I'm so grateful that we get to do this together. I want to ask you, we have a lot of entrepreneurs in our audience, a lot of people who are building businesses. And as you know, there's a lot of change right now. There's changes, structural changes from crowdsourcing, there's NFTs, there's Web3. Everyone's trying to kind of find new ways to do it. If you were to give any advice as you mentor younger people, and I know you're the CEO of a pretty young team, how do you get to the point? Because you've had this thematically throughout your career, and you said maybe it was your mentor with Hines, but what would your advice be in terms of creative problem solving, or even starting a business where you're not just getting caught up with everyone else in the competition, but you're doing something where there's a chance you can stand out and hopefully solve a problem?
I actually get bored really quickly.
So do I, by the way. So that's good.
Yeah. So I've always really had the view, I kind of grew up in an era where they said you get a job, and you get a job and you work it and you do all this. My dad was a guy who had the same job for 35 years, retired, and the rest. I've always approached it and said, whenever you have a job, what you want to do is work as fast as you possibly can and get out of it, or find someone else who will do it for you, so that you can have free time to think of what's next. My son says I have a little case of future lust, and I may have a little bit of future lust. I like what's coming up next. I keep thinking what's coming up next is going to be more interesting than what's going on now.
So it's curiosity. What I hear you say is curiosity, interest, trying to like almost look around, like looking around the curve to what's next, and then with like genuine curiosity and excitement. It sounds like
it's excitement and curiosity about what's next, and how can you harness it in a way that is fundamentally good for humanity. Deep in my soul, I think about that every day. Okay, I don't play it out there, but it's in my soul. That's what led me to do parks in Houston for so long. Love doing parks in Houston, and it wasn't. That wasn't
you built the largest park system in the nation, if I recollect it, with that interconnected parks.
We did the what's been called now the most impactful park project done in any major city in the United States with our Bayou Greenways 2020, and it was a magic experience. It was the hardest thing I've ever done. Hardest, absolutely, just how to figure out public-private ventures and put parks and green space through Houston, Texas. That was
pretty hard to do. Basically, you have a city full of concrete. How do you greenify it and connect it?
Well, and it was just like an entrepreneurial thing. It was like we needed a big idea, and we thrashed and thrashed and thrashed around. We finally came up with a big idea. And people are like, you can't do that, and all the reasons why it couldn't be done and it wouldn't work, and blah, 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 and what about the money? Well, we had a great idea. We figured out the math of it. Because of GIS, it was sort of a technology solution. Before you had GIS, you couldn't have done that. Anyway, it's just that same thing. Once we put together the first 4 things we needed, capital was there.
Yeah. And
then we did it. So, here's where I think you and I are going to have so much fun. I think we're just at the edge of where we're going with the workforce housing. You're primarily buying things, I'm primarily building things. It's the naturally occurring, it's the new, we need both of it. What we really need to do with Renter Nation, you and I have talked about it a few times, but I think we're going to tokenize ownership. And we're going to create a world in which renters are actually building equity.
Wow.
And that's going to fundamentally change the way multifamily works. I think we're going to keep delivering a more efficient operating approach. Technology is allowing us to do that.
You mean the operations will get more and more efficient?
AI and all these things will help. We'll keep getting that better. And look, this thing you started with Veritas Impact Partners. When you just, put the knife in your teeth to do Veritas, Veritas is everything these communities need. And I remember when you were like pulling your hair out, how are we going to do this? And you said, Tom, I'm just going to take this on. It was early COVID. I'm going to take this on. And you were like, and you knew you had a vision.
Yeah.
You found a team. Needed capital, you put in a lot of capital, and now Veritas Impact Partners is taking off.
Yeah.
And I talked to Jennifer today, and what's happening with our smart living product in Houston is mind-blowing in terms of building community. If we can build community, build good properties, build community, have impact on how good those communities come together, we're going to be proud of the work we do.
And I think we've proven time and time again, when it comes from a strong community, people stay. You get higher retention rates, you get higher referral rates, which actually the investors always benefit.
Yep.
But the benefit comes organically and sustainably rather than extractively. I think it's exciting. Tom, you and I have made a commitment. We won't talk about it too much, but on the show, We've talked about whether it's going to be tokenized ownership for renters so they can build equity, so they won't become renters forever. We've talked about rewards programs and other things, but you and I are going to commit, I think on the show, if you're willing to, that in the next 12 months, we will pilot a program around either tokenized equity, or we'll start with some form of reward that this industry is not done yet. Because you and I both have some energy. Is that something you want to bro in on that?
I will commit to that.
Okay, we're in. Next 12 months, you've heard it here first. You'll hear a new program that's never been done before in commercial real estate, and we're just going to make it up and do it.
We're going to make it up and do it.
Tom, I am so appreciative of your time, your energy, and I am just so grateful to call you a friend and a business partner is just like the icing on the cake. So thank you for taking the time today. This was super fun.
Well, thank you, and let's keep having fun.
Yes.
Let's have an impact
Yes.
and see where it all goes.
I love it. Thank you.
Thank you.